Hello, my name is Yoga Naidu, and today's topic is going to be about landed cost. Now, landed cost, the background to that is typically one would buy a product, and then one would need to figure out other cost items that adds to that product. For example, like freighting and duties and customs, etc. And so that landed cost is what we're going to try and adjust for a particular product. The way we're going to do that is using the Idempira cost adjustment functionality. I believe it's a simpler way of doing it. There are other complex ways of doing it, whereby on a vendor's invoice you could do a cost distribution, but that's a topic for a later video. So let's go ahead and create a product. So we want to create a brand new product so that we can see the creation of the cost records and see the progression of the cost records, eventually getting to the cost that we require for the product. So let's go ahead and create some sales pricing. And similarly, we want to create purchase pricing. I have excluded tax specifically so that we can view the general ledger postings much more explicitly, so we know exactly which components are costs and which are tax. So the way in this IDMP implementation, the way we've configured it is that as soon as one creates a purchase cost for the item and there's no costing record, it will create a costing record. Okay, so you'd see that the purchase price of 3 is now part of the cost, and we're using the average invoice costing method. So let's go ahead and now purchase the item. And as mentioned, I want to exclude tax from the pricing, so the general ledger is more explicit in terms of the amounts. So we pick up the new product that we just created, and you'll see that the price picks up on the price list of 3. So let's purchase 10, and the pricing happens to be 4. Let's go ahead and save the record. So 10 times that 4 would give you 40, including 14% tax on top of that. Let's complete it. And then let's go ahead and actually receive the 10 items into our stock. I'm going to create the material receipt based on the purchase order that we just completed, and I believe it's 14. Okay, so the receipt line is completed. I think we're all ready now to complete the material receipt. Okay, and while we're at it, let's go ahead and create the invoice from this material receipt. Okay, so your total lines add up to 40 Rand, and let's go ahead and now complete, and then look at the postings that is generated for these various documents. So if you look at the postings of this invoice, you would see that the supplier, the creditors control has been credited 45.60, and 560 is basically the tax component, and 40 is our asset component. And these clearing accounts clear after the material receipt is matched to the invoice. So let's go ahead and look at the material receipt, and you'd see here, rightly so, that our asset now is increased by 40, and that's basically what we expect. So we created the product, we purchased the product, we've examined the postings, but let's have a look now at the cost. You would remember that the cost was set to 3 initially. Let's see how it looks now. I believe if you refresh it, you would now see the current cost price is 4, and there was a quantity of 10 that was actually receipted. Okay, so all's good at this stage. Now let's imagine that we now receive a freighting invoice for this particular set of goods. So let's go ahead and create that invoice. I'm going to create a purchase order to create the invoice. Okay, so the service that was rendered by this particular supplier was freighting. So I'm going to pull up a charge called freight, and so that cost would then go against that charge at the invoice stage. So let's make it 10, the price, and let's go ahead and then complete it. Okay, so we have a completed purchase order. Now let's go ahead and generate a invoice from that particular purchase order. So we create lines from that purchase order, and there it is. Okay, that looks all correct. So let's go ahead and now examine the general ledger postings for that particular expense. So as could be expected, there's a tax component, there's an expense called freight that's now has a value of 10, and we owe the supplier a total of the expense together with the tax as a total expense. So that sounds correct. The pricing, though, with this new service that affects this particular product, is not correct. It's sitting at 4, and we paid 10. So we should, if you divide that 10 by 10, you get another rand. So the price should really be 5. Okay, so the way to do this is to go ahead and do a cost adjustment. And let's create a new cost adjustment. The costing method that we interested in is average invoice. So we choose it there. Now on the detail line, we're going to stipulate which product we're interested in, and it shows that the current cost price is 4, and we mentioned that we now want to increase it to 5. So the charge is fairly important, since the cost will be now adjusted, but it's typically an expense that will be credited the other side of the GL postings. And considering that we actually debited the freighting cost, it sounds like a good thing to basically choose freight here, so that the freight will be credited. So you have a debit you debit on the invoice stage, and you'll have a credit here. So basically nullifying that particular expense, and that expense will then move into the cost of sales. So let's complete this. And you would notice in the posting that what happened is that the stock account is moved by 10, and that is correct. So your asset value is increased, and as mentioned, the expense is now credited with that 10, essentially clearing or nullifying the expense from the vendor's invoice. So now let's go and do a sales order to see the effect on the cost of sales. So this particular sales order is POS order, so it will generate the shipment as well as the invoice immediately after it is completed. So we want to concentrate on the product that we just created. And in this particular case, let us sell sell 6 items. Okay, and selling price is still 10. And let's go ahead and complete this order. So you see, as mentioned, that the shipment is generated immediately because this is the point of sale, as well as the invoice has been created. And if we now go ahead and have a look at those documents, just to examine their postings, you would see that cost of sales is indeed correct. It's now you ship 6 items and the new cost of R5 is included in the cost of sales. Okay, and it's decreased your asset by 30. And let's go have a look at the invoice. Related to that sales order, and so it's a typical invoice, a tax component, a sales component, as well as your debtors are basically debited. And let's go have a look at the product and see the pricing has changed. Yes, it has changed. It is now 5 due to the cost adjustment that we did. And you'd see the quantity is now 4 since we've sold 6. So if we have to look at the income and expense statement for the transactions that we did, we will see there's a sales of 60, there's a cost of sales of 30, which is correct. So 6 times the cost is 5, which will give you 30, and it gives you a gross profit of 30. You'd also see that the other expense item of freight is now being nullified by both the debit and credit legs. Okay, so hopefully this gives you an insight as to how to adjust your pricing, your costing for items to cater for other items that may be added on, like in our case freighting or duties, so that the cost of sales is correct, and your product has the correct pricing. Okay, that's it. Until next time, enjoy your day.